Today in Unpacked, we are taking things differently. We are looking at how mathematics can impact the economy of a country. We try to look at all the angles, whether it's cumulative or weighted, as well as functional currency and hyperinflation and inflation. How do those translate to the economy, as well as the application of the International Financial Reporting Standards? How would that translate to the Malawian economy, as well as the other countries, other neighboring countries? How have they performed in the IAS 29? Joining me in the program is Mr. Daniel Jele, who is the president of ICAM. Welcome to the program, sir.
Thank you very much.
Thank you. Inflation needs a country for it to happen, or hyperinflation needs a country for it to happen, and it needs the economy rolling for it to happen. Now, as a country, how can we avoid hyperinflation?
That's a tough one, but indeed, inflation can be managed. And one way of managing hyperinflation or inflation in general is what we call contractionary monetary policies. That's where government intervenes in the economy by mopping excess cash through its bonds and securities that it sells. So you hear of treasury notes or treasury bills. Sometimes government uses such instruments to mop up excess liquidity from the market. So people are attracted to invest in government securities, which leaves less money in the economy going around to chase the goods that are there. So that's one way of managing inflation. Obviously, I talked about demand pool. So demand pool factors, that's where demand by far exceeds the supply of goods and services. So one way would be to tame demand through maybe introduction of interventionist policies like taxation. So taxing certain goods and services just so that people's demand for those goods kind of goes down.
Mm-hmm. Yeah. Now, with the issue of taxation, and when you see the good and bad of it, do you think it's really necessary for it to come into play in most of the things that we are doing as a country?
I think as a country, one would say we probably overtaxed in the sense that the tax basket or bracket for Malawi is too small. Too few people are contributing to taxes relative to the population. So you find that at the moment, people that are usually subjected to income tax, for instance, are people who are in formal employment. And for most people who may not be in formal employment, the mechanism of collecting taxes is kind of difficult, which means too few people pay taxes. And unfortunately, you find that the tax authorities will try to generate as much revenue from a smaller section of the population. So in this kind of context, it becomes a bit difficult to use that as a contractionary measure, because the reality is you already have people who are being taxed a lot anyway. But if you had a way of increasing the tax bracket, bringing more people who are currently not paying tax into the tax equation, then it would mean, yes, you are able to now reduce the amount of money people have available to spend on goods and services.
Mm-hmm. Now, I'll speak now in the term as you as ICAM, because we have seen a lot of people eroding the tax resources and the few contributing. Now, as ICAM, what's your take on that, to say you would like to contribute in issues like that? We cannot talk about MRA, but we have to talk about ICAM now. What do you think should be done?
I think as ICAM, our role is to ensure that we assist government in coming up with perhaps policies or recommending policies that help increase the tax bracket, bringing people that are currently not paying tax into the tax equation, and also trying to bring across policies that promote trade and business in Malawi. Doing business in Malawi currently is very difficult. There's so many administrative hassles that people have to go through in order to do businesses successfully. The moment you have an economy where the ease of doing business is kind of low, then it makes it difficult for that economy to grow. If economies are not growing, it means not much revenue or income is being generated by the people, and therefore there will be less tax being collected. But where you grow the economy, then you find that people are becoming more productive, and as more people are getting productive, it means they are being employed. So formal employment will increase, people will start earning money, and from the money that they're earning, they'll start contributing to taxes, and that will increase the tax collection for government.
Now, speaking on tax collection as for the government and widening the basket for everybody to take their part to boost the economy, right now, is Malawi in the hyperinflation mode, yes or no?
That's a difficult question to answer simplistically, but from an accounting perspective, the straight answer is no. And as the Institute of Chartered Accountants, we came up with our position paper on the state of the Malawi economy in as far as hyperinflation is concerned. So maybe let me unpack it this way. First, when you look at hyperinflation, it is an economic term, and there's a bit of a divergence between the economist's definition of hyperinflation and the accountants. So from a pure economics perspective, an economist will define inflation as a state where goods or prices for goods and services are rapidly expanding over a short period of time, and they will normally put a quantitative measure. And most economic textbooks will say where inflation is rising at a rate of 50% per month, that talks to a state of hyperinflation. Now, from an accounting perspective, the question of whether an economy is hyperinflationary or not is addressed in International Accounting Standard number 29. So IAS 29 provides 5 criteria for determining whether an economy is hyperinflationary or not. One is quantitative, so it speaks to the numbers, and what it says is that where the cumulative inflation over a period of 3 years exceeds 100%, then an economy may be said to be in a hyperinflationary state. However, in International Accounting Standard number 29 recognizes other qualitative factors, and these include whether or not people in the economy prefer to use the local currency or functional currency or not. So where people have lost trust in their currency and they start to use another country's currency or a more stable international currency, it begins to point to a state of hyperinflation. But that's not all. You also have to look at the other 3 factors. So you'll have to look at whether indeed in that economy people have lost trust in the currency and they have started purchasing assets as a way of storing value, not wanting to keep money in cash. And you'll find that in the case of Malawi, that view is not supported.
We haven't reached it.
We haven't reached that state. So when you look at the qualitative factors, the case for Malawi does not point to the economy being in a hyperinflationary state. But if we only look at the numbers, the quantitative aspect, then yes, there seems to be a case for thinking that way. But since we are governed by the International Financial Reporting Standards regime, definitely our position as the ICAM is governed by IAS 29. And looking at the provision of IAS 29, it is our firm belief that this economy is not in a hyperinflationary state.
Now, on that note, when we look at IFRS and IAS 29,
yes,
do you think they are kind of applicable and fair to the African economies?
Actually, when you look at the structure of African economies, or developing economies in general, they tend to be more exposed to economic shocks than perhaps the stronger first world, second world economies. So to that extent, it may look like maybe the system is rigged against developing countries. But in terms of IAS 29, I think it is in a way fair because it does not just look at the numbers. Because looking at the numbers may belie certain important attributes as expounded in the standard. However, we have alternative reporting regimes. So, for instance, in the United States, they use what is called the US GAAP, the General Accepted Accounting Practice, from the US perspective. From that standards perspective, it only considers the quantitative aspects. So they don't look at qualitative factors. So if Malawi were reporting in the US GAAP context, yes, you could say we have hit the threshold for determining that we are hyperinflationary, because they don't look at the qualitative factors. But because we are governed by IFRS, we subscribe rather to IFRS regime, we firmly believe, and this has gone through a rigorous process of evaluation and considering data from the local situation, we are not hyperinflationary. Yes.
Now, when you look at this, it's more of a debate that needs to be argued carefully. When you look at the accountant's definition and the economist's definition of hyperinflation, which one do you think plays the role in Malawian economy?
So, to the extent that the term inflation or even hyperinflation are generally economic terms, I'm sure economists will argue that their perspective on hyperinflation is more accurate. And perhaps there is merit to think that way, because to get to a point where inflation is running into, say, 50% per month, you will see that that state of being, people indeed lose confidence in their currency. And if we go back in history, there are countries like West Germany soon after, or rather Germany soon after the Second World War, their economy went flat out, and the currency lost value so much that it was almost worthless. In recent times, closer to home, we had the Zimbabwe scenario where, remember, they went to the point of printing currency in billions. You had a note for 10 billion kwacha for dollars, for instance. So when you get to that extreme level, yes, you would say it is indeed a hyperinflationary status or situation. The accountant's view is governed from a reporting perspective to address the need of ensuring that there is comparability in real value terms between reporting currency as of today and at any point in time, either in the past or in future. So we are trying to address the issue of objectivity in terms of the reporting. So the standard has tried to bring convergence of thought within the accounting community by defining hyperinflation with respect to cumulative inflation over a 3-year cycle. And 100% has been looked at as the threshold. If you look at a 3-year cumulative inflation of 100%, and you try to compute the monthly or the month-on-month inflation rate, it's far lower than the 50% threshold that the economists use. So it depends on the context. If you are an economist, you're looking at planning the economic situation of the country, perhaps the economist's view might be more appropriate. But from an accounting or financial reporting perspective, if you are really looking at reporting numbers that should be trusted by the international community, yes, we have to go by the accounting standards, and that's the IAS 29. Yes.
Now, looking at hyperinflation as an arithmetic number, and that inflation is calculated as a relative number, that's a weighted average. In this regard, should we look at it as a weighted or cumulative calculation? If it's weighted, then can we not adopt the cumulative here in Malawi?
So let me unpack that, because it looks like both measures are actually relevant in this equation. When we talk of inflation, we are not looking at inflation from the context of a single good or services. We are looking at a collection of goods and services, food and non-food. So what we typically call as a national inflation figure, for instance, is a weighted average of the goods that form part of your inflation basket that you are using to calculate the number. So it is a weighted number. To that extent, it is relevant and useful because goods or prices of goods and services change at different levels depending on the factors that determine its cost of production. When it comes to cumulative numbers, so like from the accounting perspective, the cumulative number makes sense because that's the one that determines the threshold at which you should determine whether you are in a state of hyperinflation or not from the quantitative criteria perspective. So from that angle, cumulative is a useful number because you really are looking at economic performance over a period of time and not just a single point in time. So from that perspective, both cumulative and weighted average numbers are relevant in making a useful determination of the state of the economy.
Mm-hmm. Now, speaking of numbers that are contributing to the workout of the economy, according to the IMF and the World Economic Outlook of October 2024, Malawi had a 3-year cumulative inflation of 88% as of December 2023, and a forecast of the 3-year cumulative rates of inflation of 106% and 80% for 2024 and 2025, respectively. Now, NSO here in Malawi had a 3-year and 12-month cumulative rates of inflation of 116% and 34%, respectively, as of September 2024. Now, we believe that Malawi must be considered hyperinflationary as of December 31, 2024. That's the IAS 29 I quote there. Now, why believe and what should we prepare ourselves psychologically for in that context?
So that pronouncement, I believe, was done by one of the global accounting firms in terms of their outlook for Malawi. And I have had a look at the communication that came out. It's only considered the quantitative criteria, which is the cumulative inflation. And indeed, our own assessment validates the point that as at September, cumulative inflation over a 3-year horizon for Malawi, that's from September of 2021 to September of 2024, had reached 116%. If you look at it from the quantitative criteria, the numbers only, yes, we have crossed the threshold at which hyperinflation must be considered. But because we are in the International Accounting Standard regime or IFRS regime in Malawi, we just don't look at the numbers. We also have to look at the qualitative factors. In fact, the standard itself does not necessarily give more weighting to either the qualitative numbers or the qualitative factors or the quantitative factors. So since the standard is silent, we take it they are all ranked more or less the same. So one is not superior to the other. But in arriving at a more informed position, I believe the IS 29 provides a better basis because it's not just looking at the numbers. Structures of the economy can differ. And just looking at a single criterion as a basis for determining hyperinflation could be misleading because there could be other underlying factors that perhaps they negate the assertion that we are in a hyperinflationary state. So if you look at the standard, and this standard, by the way, was not necessarily developed by Malawians or Malawi for Malawi. It's an international standard.
Yes.
And it applies globally, perhaps save for the United States of America, where they've got their own US GAAP. So I think when you look at the pronouncement by the global accounting firms we are talking about, they've only looked at the numbers, but there is little to suggest they've considered the qualitative factors. And unless their analysis is based on US GAAP, which is not really what they are saying, they are talking about IS 29, they should have also commented on the qualitative factors. As ICAM, we are mandated by law in Malawi to be the authority on this matter. some of the finest brains that the country has produced within the accounting and finance field in Malawi looked at this. So we've got a well-elaborate governance structure where, as an institute, we have got a technical standards committee which comprises several well-qualified members from various backgrounds, mostly practicing members. They considered this at length. We first considered this position as at August, and we determined then that Malawi was not in a hyperinflationary state on account of us not satisfying the qualitative criteria. At that point, our inflation was around 106%, and the view taken was that we were not hyperinflationary. Beyond that, the matter has now come to the council, which is like the board of the institute, to also deliberate. And beyond that, we also do a lot of stakeholder consultations, that this is our perspective on these matters, and trying to validate whether other key players in the economy share the same view or they have varying views, so that we can beef up our analysis. And all that was done, and we still came up to the conclusion this time around in September that we are not in a hyperinflationary state, and that we are not likely to be in a hyperinflationary state come end of December. And why do I say so? If you look at the World Economic Outlook report on Malawi, inflation for 2025 is projected to drop to about 15%. We're expecting it to close at around 34% in December. And in 2025, despite the elections and everything else that come with it, we are looking at inflation dropping, or they are rather looking at inflation dropping to about 15%. We also consulted the Reserve Bank of Malawi, and in their outlook, they think it's likely to be in the region of 20 to 25%. Either way, it's a huge drop from where we're coming from. So even the quantitative criteria, based on current projections, we see that inflation is likely to be coming down, such that maybe the cumulative position in a few months' time may very well be less than the 100% threshold. But we are also seeing that quite a significant chunk of the weighted average of our national inflation comes from the food inflation, and that is usually influenced a lot by the price of maize. And as you are aware, we're just going into the rainy season. Very soon we'll be harvesting. As we are going towards March and the harvest period, the price of maize tends to go down. Even as we speak now, empirical evidence suggests that the price of maize in recent few weeks has been actually coming down, which means you expect the Malawi inflation, weighted average inflation, to really be coming down. When you look at these factors on the quantitative side, we are optimistic that with the policy interventions that government and the Reserve Bank obviously will be looking into, we are likely to see inflation coming down, and therefore the view that we are hyperinflationary or are likely to slip further maybe is not well supported based on current projections. And we look at the qualitative factors, we are seeing that people still trust the currency. In fact, looking at observable data from the banking industry, you will find that the level of investment in monetary securities, that is, you're looking at government securities, treasury bills, treasury notes, or even deposits by customers into banks, has been rising. In a hyperinflationary environment, typically you wouldn't want to keep your money for long in cash, because you are always fearing that it will lose value in a short period of time. But here we have people investing money for the long term. Treasury notes are going up to 10 years, and people are still investing. That tells you the population in Malawi, or the average at least, do still have confidence in the local currency. Let's look at when you're buying goods and services in the market. Observable data suggests that at the moment, people are still issuing quotations with a validity period of 7 to 30 days. Now, if you are in a hyperinflationary environment where inflation is moving at, say, 50% per month, you would not want to give credit terms for a long time at the same price. You would want to be pricing in inflation into your numbers so that by the time you get the money, you have at least preserved some value. This is not supported based on what we are seeing on the ground at the moment. So when you say people have lost trust in their currency, the answer is clearly not. If you look at whether people are necessarily panic buying assets to preserve value, this again is not very well supported by data on the ground. We are not seeing people running out on banks to collect their money to buy land or property just because they want to protect value or preserve value. People are basically keeping money in banks, in local currency as well. Yes, there are some few pockets of the market that have traditionally transacted maybe in prices that are linked to the foreign currencies like dollar. So some real estate transactions, for instance, would happen in that way. International consultancies, these are foreigners coming to do consulting work in Malawi. They will typically quote their prices in dollars. And if you see this happening, it's not because of the current situation. That's a market practice over time. Because at the end of the day, why would someone who is coming from the US to do work in Malawi want to be paid in Malawi kwacha anyway? Even if they're paid in Malawi kwacha, they will have to basically convert it into their currency when they are going. So you will find that at the end of the day, the view that we are in a hyperinflationary state, from a practical perspective, not just looking at the numbers, is not supported.
Your last word now to Malawians. People need to know what's the stance of inflation and hyperinflation in the country.
I think my message to Malawians would be, don't panic. The game of economics, unfortunately, sometimes can be one that is driven by self-fulfilling prophecies. People are speculative about inflation and the state. If you look at the report by the global accounting firms, which has made references to other countries, their situations are far different from ours. I cannot competently speak about the qualitative factors in those economies, but some you can see that they are afflicted by things like war. So if you take the case of Lebanon, if you take the case of Iran, or indeed some of the countries mentioned, you find that their situation could not compare to Malawi's situation. So my word to Malawians out there is, do not panic. We are not at the situation or at the stage where we have to start panicking about hyperinflation, because if you look at the qualitative data that we have described, there's nothing that suggests that things are changing anytime soon. If you look at the quantitative criteria, which the global accounting firms have used to make the case that Malawi is hyperinflationary, the projections are indicative that it is coming down, and not coming down by a small margin. So from that perspective, I would still be confident in the prospects for the Malawi economy. Of course, we have a lot of work cut out to ensure that we stabilize the economy.
Mr. Danjere, thank you so much for making time to unpack the issues of hyperinflation here in Malawi.
Thank you very much.
Thank you. That's how we end this week's edition of Unpacked here on MBC. My name is Waupi Mongulu. Until next week, I say keep watching MBC and Unpacked, and goodbye.